Welcome to Alpha Insights. I'm Archer. Today we're looking at a move that's reshaping data center networking, and I've got Ryan with me to unpack it. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Archer. Excited to dig into this. It's one of those strategic shifts that actually matters for investors and engineers alike.
So Ryan, big picture first. A major semiconductor company just spent $5.5 billion on a photonics startup. Why does that matter beyond the press release?
It matters because it's a loud signal. Optics are moving from the fringes into the data center core. In plain English, the business is saying copper connections, the little metal traces inside servers and switches, are on their way out, and light-based connections are coming in. That changes where money flows, and it accelerates product roadmaps across the whole supply chain.
And for smaller companies in that space, like the one we often hear about, how does that validation change things?
So, the real question here is scale and timing. Validation from a big buyer makes customers and investors take notice. For a small firm that has an integrated optical platform, think of it as a way to put optical engines really close to chips. This can open doors to trials, purchase orders, or even acquisition conversations. But it doesn't magically solve manufacturing or customer qualification.
Give us the technical elevator pitch. What is an optical interposer, and why would a hyperscaler prefer it?
An optical interposer is basically a platform that holds optical engines and passive light circuits very close to the electronic processor. That proximity cuts down on short copper paths, which reduces power use and cost, and it can shrink the overall footprint. In practice, that means denser GPU clusters, faster links, and less heat per bit moved, which is exactly what data centers running large AI workloads want.
Right, and I heard the company won an industry award and has a production order. How big are we talking?
They received a Respected Innovation Award earlier this month for a 1.6 terabit product, and they have a production order worth more than $5 million for 800 gigabit optical engines, with shipments planned later this year. Plus, they raised over $300 million recently to extend their runway. Those are tangible signals: product, orders, and funding.
I mean, when you look at the data, how big could this market actually get?
Industry research expects rapid growth. Essentially a doubling of the transceiver market for AI networks in a couple of years, driven by denser GPU racks and massive cloud deployments. Names like NVIDIA and large cloud providers are at the center of that demand. So the addressable market is already meaningful and expanding fast.
Interesting.
But, and this is important, validation doesn't remove real-world execution risk. Manufacturing photonics at scale is tough. Yields can be unpredictable. Qualification cycles for big cloud customers can be lengthy. And large incumbents like Broadcom, Coherent, and Lumentum have scale and customer relationships that are hard to beat. Honestly, I was a bit surprised by this one. The big player's acquisition creates a template. Either buy the tech and integrate it, or compete aggressively. That dynamic can squeeze margins for smaller independents unless they lock in design wins or strategic partnerships quickly.
Walk me through realistic scenarios for this smaller player over the next year or two.
There are three plausible paths. 1. They execute the production ramp for those 800 gigabit engines later this year, prove yields and reliability, and expand orders into next year. That's the commercial ramp upside. 2. They land a partnership or get picked up by a larger OEM or component maker. That accelerates adoption and reduces scale risk. 3. They hit manufacturing or qualification delays, need more capital, and get outcompeted on pricing and distribution. Any of those outcomes is possible.
What should investors be watching week to week or quarter to quarter?
Key milestones are clear: actual shipment volumes later this year, reported manufacturing yields and reliability metrics, and any new purchase orders or design wins with switch or GPU card vendors. Also, watch public moves by incumbents and what large cloud providers say about optical-first architectures. That will reshape adoption timing.
Right. And any quick portfolio advice for listeners who are thinking about exposure here?
Balance is the word. This is an exciting thematic bet. Optics moving closer to compute is plausible and backed by real demand, but it's still a hardware commercialization story with classic risks. If you're curious, size exposure modestly, follow the milestones I mentioned, and avoid assuming validation equals a safe investment overnight.
Right.
And if I can add one final note, partnerships and design wins matter more than awards. Awards get attention. Design wins get revenue.
Great point. Okay, let's wrap up. 2 quick takeaways.
First, a large strategic purchase has accelerated the optics narrative. This is now a near-term story, not a distant trend. Second, for small suppliers, 3 things determine success: proven manufacturing yields, clear design wins with major customers, and strategic partnerships or scale.
Excellent. Thanks, Ryan. And listeners, if you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai.